Just when you thought things couldn't get worse for Tesla stock investors, more news keeps coming out that sends the stock price lower and sends the prospects of the company's long-term expectations even lower. The company traded at a peak valuation over 1.2 trillion in late 2021, early 2022. It's now trading at a market cap of 556 billion. And I don't know if Tesla's stock will ever get back to that market cap of 1.2 trillion. It certainly doesn't seem that way. It may have been the excellent time for Tesla stock investors to cash out, take their profits, the significant gains from 2019 to 2022 when the market cap exploded higher. It may have been a good time to take profits then. But let's take a look at what has Tesla stock investors even more concerned following today's updated information.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Here I have a chart of what I was just talking about earlier. Tesla's market capitalization absolutely exploded from 2019 up to until early 2022, and then it's been on a downtrend ever since. There's no telling if it'll ever get back up to this level, but it doesn't seem like it's going to be the case unless, of course, Tesla comes out with something truly innovative and actually delivers on some of its long promised and long delayed initiatives like the robo-taxi. We're going to hear more about that on August 8th, and Tesla stock investors are hoping, they have their fingers crossed that something good comes out of that robo-taxi event, and it's not just another one of those marketing events where it's not very much substance and a lot of hype. Now, one thing I've been talking about as one reason to avoid Tesla or any of the car manufacturers or any of the EV companies is because of the fierce competitive pressure. And I mentioned that when one company takes a move, cutting prices like Tesla has done, competition doesn't just sit back and say, why are you cutting prices? It sucks. We're all going to lose market share. Oh my God, Tesla, you're the only one that knows how to cut prices. That's not what competition does. When you cut prices and you try to take market share away from your competition, they're going to retaliate. They're not going to sit back and just let you do your move and take the market share. And we saw that from Ford again. Ford has taken several steps against Tesla following Tesla's move to cut prices. So today, again, Ford sent out a bulletin telling its dealers to offer $1,500 rebate specifically for Tesla owners who are looking to buy an F-150 Lightning. So this is a strong message pointed at Tesla saying, you're trying to take market share away from us, away from an industry that we're interested in. We'll show you how we respond to moves like that. And it's not just Ford that's responding like this. Other automakers are also offering their price cuts of their own, although they may not be as loud and as direct as Ford is being here, telling Tesla just how they feel about Tesla's price cutting efforts. A Ford dealer also said that the incentive is available for folks purchasing the Mustang Mach-E SUV as well. So Tesla trying to gain market share with the Cybertruck, Tesla trying to sell more Model Y, Ford responding saying, we're not going to let you take market share. In fact, we're willing to cut prices again to make sure that we hold our market share. And if you cut prices again, Tesla, we'll likely respond with further moves as well. So if you want to go lower, we'll go lower. You can keep going lower, we'll keep going lower. And guess what? Even though Tesla has the much better balance sheet, right? Tesla's cash versus long-term debt is in a much better position compared to Ford. Tesla doesn't have the legacy auto segment like Ford does that's generating billions and billions and billions in cash flow for the company. The EV segment is not the segment that's generating cash flow for Ford. Ford doesn't rely on its EV segment to generate cash flow. It's the legacy auto segment that's generating strong cash flow for Ford. So that segment can continue to support the EV segment as Ford continues cutting prices in this segment here. Tesla doesn't have that luxury. It has the luxury of a better balance sheet. It has the luxury of better profit margins in its EV segment, but it doesn't have that other segment to supplement. So there's a point at which, right, Tesla's gross profit margin has been falling. There's a point at which it can't go any lower unless it's willing to take losses continuously to fight this price war. It remains to be seen if it's willing to do that. And if it is willing to do that, as an investor, do you want to stick around for this war where prices are going lower and lower, tit for tat competition, margins are getting lower and lower for Tesla? Do you want to be around for that battle? That's what I've been suggesting investors avoid by not going into Tesla stock, and I haven't recommended Tesla stock for a very long time. Now, in addition to these price wars, Tesla's expectations are getting worse because price competition is never good news for a company's profitability. For the current quarter, its earnings per share estimate is now down to 50 cents. 90 days ago, analysts on Wall Street were expecting it to deliver 76 cents in earnings per share before moving down to 68 cents, before moving down to 65, and then 56, and then another more than 10% decrease in EPS expectations for Tesla's current quarter, which it will report for March. The next quarter, similar story. 90 days ago, 85 cents was the EPS estimate, down to 75 to 72 to 68 to 61. So continuous decreasing expectations for Tesla for its earnings per share, and similar story for the current year and next year. Earnings per share going from $3.45 expected in 2024 down to $2.53 expected for 2024, in a nearly $1 EPS estimate decrease. And similar story for 2025, where the EPS from $4.52 is down to $3.44. So just when you thought the expectations could not get any worse for Tesla, they actually decreased quite a bit just in the last 7 days alone. And today's news, again with Ford coming out with that price cut, is again more bad news, which will lead to more downward pressure for Tesla. It's going to do one of two things. Either number one, it's going to hurt Tesla's sales because now customers are looking at Ford's options and it's more attractive with the 1500 cut. Even though some customers are still going to choose Tesla, Tesla arguably has the better vehicle compared to those vehicles that Ford is slashing prices on. But still, customers don't just look at performance of a vehicle. They look at taste, they look at style, and they might prefer Ford's cars over Tesla's, especially with that incremental $1,500 incentive. Or more likely, what I think is going to happen is Tesla is going to cut prices again to retaliate and to make another move to gain market share. And so I think that's going to impact profit margins more so than it's going to impact sales, because I think Tesla has signaled through several price cuts that this is the strategy it's taking, and it's willing to push this strategy all the way. It's willing to push this strategy all the way, and it's going to keep cutting prices to maintain as much market share as it can, as consumers now have more and more choice when they go out to buy an electric vehicle. And so more often they're choosing a vehicle other than a Tesla, whereas previously Tesla dominated this market so significantly. It's not that situation anymore. It's got stronger competition from EV rivals, increasing supply, cutting prices. The market is just in a mess, and I would not want to be an investor in this industry at all. To start 2024, I was not attracted to this industry, and after the first 3 months of 2024, I'm even less optimistic about the EV industry than I was to begin the year with. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.